What is going on, guys? Welcome back to Monday Live Lab. We had a crazy weekend. Things popped off. We had some action towards the end of last week, and then obviously big things happening with the US and Israel doing a joint strike on Iran. People in the economic space kind of speculating all weekend about what the repercussions are going to be, what the markets are going to look like today. And to be honest with you, the markets look a little bit different than what a lot of people were thinking today. It's looking like the markets are kind of brushing off this conflict a little bit. So, we're going to get into why the markets are reacting the way they are today. We're also going to get into a couple of other things. We're going to talk about banking stocks. Last Friday, we saw that banking stocks were selling off big time, and that's not a good sign. A major reason for why that is because there's a lot of vulnerabilities in the banking system. So we're going to briefly talk about that. And then the last thing we're going to talk about in this Monday Live Lab is the housing market and some of the things we're seeing there. Some bad signs that are showing that the housing market is looking a little bit weak. But let's go ahead and get started with the big news from this weekend. We saw the US and Israel do a joint strike on Iran early Saturday morning. It seems like anytime we have these big global events, they always happen on the weekend, right? And the objective of this attack looks like it was to take out some of the leaders of the Islamic regime in Iran. And the United States and Israel accomplished that goal. They successfully killed the Islamic regime supreme leader Ali Khamenei. It looks like they have put in a new leader. And I actually saw somewhere last night that the new leader of the Islamic regime may have been taken out as well. So the US has been pretty good at making these precise attacks and taking out leaders when they want to, right? When they want to go and get someone, they have been successful so far. They're 2 for 2 this year, taking out the leader of Venezuela and bringing him back to the United States, and now killing the supreme leader of Iran, Ali Khamenei. So, Iran was obviously not stoked about this. Iran retaliated. We saw Iran striking U.S. bases in Qatar, Kuwait, the United Arab Emirates. We saw Iran attacking U.S. ships, U.S. aircraft carriers. And then we also saw some of these large buildings, some of this large infrastructure across the Middle East in places like Dubai, the UAE. I've seen videos all over social media of some of these buildings getting struck by missiles. So things are not great in the Middle East, but the markets are seeming to brush this off a little bit. Now, one of the big fears that we saw over the weekend was that Iran threatened to close the Strait of Hormuz, which is a major waterway where a lot of trade happens and really where a lot of the world oil trade happens. Around 20% of the world's oil travels through the Strait of Hormuz, over 20 million barrels per day. So with the Iran threatening to close the Strait of Hormuz, this had a lot of people speculating that oil prices would be spiking up today, and they did. Oil is up around 6%, and that's obviously going to have a big impact on markets, right? Energy goes into everything. All businesses use energy, rely on oil. So if the oil price goes up, it's going to put pressure on risk assets, on stocks. So this makes sense, right? When you have conflict going on in one of the main oil regions across the world where you have some of the largest oil producers, it's going to probably lead to oil prices moving higher. Now, I don't know if Iran can really close the Strait of Hormuz. They don't own it, right? There's a lot of other powerful countries in that region. They can try to close it, but it looks like them closing this strait is probably more of a threat and something that's not actually going to happen. And we'll have to follow these negotiations between the United States, Iran, Israel, and some of these other big countries like the United Arab Emirates in this region and see what happens with this shipping route. But with the oil price going higher, some would expect that maybe the stock market would be selling off today. And I saw all these funny memes over the weekend about how the stock market, like, I saw this meme where it was a picture of it was like a cupboard. It was like glass plates in a cupboard, and they're like leaning against the glass, and it's like the stock market waiting to open on Monday, right? Insinuating that all these plates are going to break, insinuating that we're going to have this big stock market crash today. But that is not what happened. And we saw a lot of people posting over the weekend that Monday is going to be crazy, right? It's going to be the biggest sell off that we've seen in forever. But the truth is, anytime we have these big global events recently, it seems like what people are expecting to happen, the opposite always happens. The markets seem heavily manipulated, and maybe the stock market just isn't too worried about this conflict. People over the weekend were talking about how this is the start of World War III. It doesn't seem like the markets are buying that, right? It doesn't seem like this is the start of World War III. It seems like the markets, while the stock market is flat, right, there is a little bit of fear out there. It doesn't seem like the markets are too worried. Now, one thing that we've seen is that the gold price is moving higher, which makes sense, right? This is more global conflict, more global tension, more global uncertainty. That's going to push up the safe haven trade. Gold is trading around $5,300 per ounce today. Now, it's not up as much as some people would expect. It's up around 0.5% today. And last time I checked the gold price, I actually saw that it was coming down. So that's a little bit surprising, right? You'd think if we had this big attack from the US on Iran and it's the start of World War III, that the gold price would be shooting up a lot higher. But the gold price is somewhat muted. It's up a little bit, but nothing too crazy. We've also seen that Treasury bond yields are up. Now, you would think that if this is this big event that's leading to a ton of global uncertainty, then people are going to pile into the safe haven trade, and they're going to pile into gold, and they're going to pile into US Treasury bonds. Now, I've said many times, I don't think that US Treasury bonds are a safe haven asset. I think they're garbage, but that's where people go when they don't trust other places, right? They're like, I'll just stay in the dollar and earn some interest. I'll stay in fixed income. However, it looks like bond demand today is actually down. So people aren't buying more US Treasuries. They're actually selling them, which is a little bit interesting. And the most interesting thing about today is that Bitcoin is up over 5%. Bitcoin just not too long ago broke above $70,000, and Bitcoin has been like this leading risk indicator for the markets, right? When we have these big global events, typically Bitcoin selling off, especially when it happens over the weekend. It's kind of leading the stock market. But Bitcoin, when we saw the US attack Iran, we didn't see Bitcoin really go down that much. It dropped briefly and then recovered like an hour later. And now Bitcoin is up even more. So the markets are a little bit interesting right now. Maybe Bitcoin's just been down for so long, and maybe this fear for this conflict was already priced in. We saw that the United States was positioning their military close to Iran for the past couple of weeks here. So maybe people were kind of pricing in what was going to happen, that we were going to get an attack on Iran. And now that it's happened and it doesn't seem like too big of a deal, people are moving back into Bitcoin. Maybe people are moving back into stocks, into risk assets, as it seems like this is going to be a conflict that's not going to last too long here. Now, one thing we also saw is that Iran's current currency, the Iranian rial, collapsed to zero. Now, their currency was already hyperinflating. I believe I saw not too long ago that it was, losing its value at a very exponential pace. But now it's looking like it's officially a big zilch, a big zero. And if I was in Iran, you know what I would want to have right now, especially with all this uncertainty, with a change in leadership, with a currency that nobody wants, I would probably want to be holding an asset that I could protect my wealth in, an asset that is not tied to my country where all this crazy shit is happening. I would probably want to hold an asset like Bitcoin, right? A decentralized money that you can use anywhere across the world, that you could send out of Iran if you feel like you're unsafe. Gold is also a good option, but think about it. If you're in Iran and you're holding gold and maybe this conflict heats up, maybe you need to get out of the country very quickly, you need to flee. Well, it's going to be tough to be lugging around gold with you, and that gold may get confiscated. So I think that with Iran's currency going to zero, this is a great advertisement for Bitcoin. And the thing is, this could happen to anyone, right? This could happen to any country where people lose trust in the government, and nobody around the world wants to have that currency, right? There's no demand for the currency. It's going to lead to it inflating away. So I think that everyone should probably have at least a little bit of Bitcoin to protect against an outcome like this. If you are interested in getting involved with Bitcoin and buying a little bit, or moving to the best platform for buying Bitcoin, you should check out my River Bitcoin link in the description. Now, what I love about River is that it is a highly secure Bitcoin platform. They put the proof of reserves right there on their website. They also have very low fees. You could buy up to $1 million worth of Bitcoin for a 1% fee, and it's also Bitcoin only. So I know they don't have exposure to all this other crypto crap. So if you are interested in buying Bitcoin or moving to the best platform for buying Bitcoin, definitely check out River. I'll put a link to River down below in the description. Now, let's see what else we got on our little docket here. So gold up a little bit, stock market kind of shaking off the risk, flat. Bitcoin performing the best. I'll take it. Yeah, so to kind of sum up what has happened over the weekend between the United States and Iran, it looks like the markets are not pricing in World War III, right? They're not too worried about this. It looks like Iran is a little bit crippled right now, and that they're probably going to come to some sort of agreement with Israel and the United States to end this conflict before too long. And it also looks like a lot of Iran's allies aren't too interested in getting involved here, mainly because this Islamic regime looks like it's coming to an end one way or another. Just not too long ago, we saw the Iranian people protesting in the streets, like hundreds of thousands of people dying, willing to give up their lives just to get a new regime in there, right? A new form of governance. So I think that this Islamic regime is probably going to be ending one way or another with U.S. involvement or not. But it looks like the United States may just be speeding up the process. So that's going to cover that section of this Monday Live Lab. If you do have any thoughts on this conflict that happened over the weekend and some predictions for how markets are going to react, I would love to know what you think. So hop down in the comments, hop in the live chat, and let me know. But we're going to move on to our second order of business today. And we're going to be talking about banking stocks, because last Friday we saw that banking stocks were selling off big time, which is a big no-no, a big red flag. Now, why were banking stocks selling off last Friday? Well, we saw that the whole stock market was selling off due to this conflict, right? I think a lot of people were maybe anticipating that we could get a strike on Iran this weekend. So last Friday, people were selling out of risk assets. We also saw last week and last weekend that Trump imposed new tariffs of 15%, which are not going to help stocks. So we had some macro factors that were not helping the stock market. And that is a major reason why stocks ended the week poorly. But we saw that bank stocks were especially down. Bank stocks were not looking great. So why is that? Well, last week, we actually saw that a mortgage lender in the UK blew up. And people are thinking that this could have ripple effects, right? There could be some sort of contagion. The UK mortgage lender was Market Financial Solutions Ltd. It looks like this lender was engaging in fraud. It looks like they were using the same collateral to back up different loans. And one thing I saw online is that they had 1.16 billion euro in loans that was backed by only 230 million euro in collateral. And this kind of sums up the banking system. It's a fractional reserve system where There's way too much leverage out there. And when these banks get a little bit too risky, a little bit too over leveraged, or when they engage in fraud, for this instance, this is what happens. You get one of them blowing up. And this was not a great look for the financial institution. So we saw US banking stocks selling off. Goldman Sachs down 7.5%, Morgan Stanley down 6.9%, Wells Fargo down 6%, Citigroup down 5.5%, and that's just a couple. Basically, all of the US banking stocks were down across the board on Friday. Now, another major reason why US banking stocks were down on Friday is, for one, the banks have just been underwater for a long time. If you've been following these unrealized losses for the banks have been over $300 billion in unrealized losses for the past 5 years. So the banks have been in a vulnerable position, but now we're starting to see bankruptcies rise. We're starting to see delinquencies and defaults rise, and that is going to lead to losses for the banks, which puts the banks in a very vulnerable position. When people default on their loans and they can't pay back the banks start taking losses. People start to chatter. People start to see what's going on, and they start to pull their money out of the bank. And that's when we get something like a bank run that we saw back in 2023 with Silicon Valley Bank. So let's talk about rising delinquencies briefly here. For auto delinquencies, they've risen to 6.74%. That's the highest delinquency rate since 1994 for auto. For credit cards, they've risen to 12.7%, the highest since 2011. For student loans, the delinquency rate for these student loans that have been delinquent for over 90 days is at 16.19% as of Q4 2025, and that's the highest delinquency rate of all time for student loans. Not great. A lot of people not cashing in on that investment. A lot of people who went to college and took out these big student loans, now they're entering the job market and realizing that there's not a lot of jobs out there. The job market is not looking great. We've also seen that delinquencies for commercial mortgage-backed securities have gone up to 12.3%. And this has a lot to do with this lack of demand for office space. We've seen a lot of companies cutting back. We saw just last week that Block cut down like half their workforce. We've seen remote work take off. We've seen AI starting to take off. So there's a lot less demand for these big office buildings in big cities like San Francisco, Los Angeles, Chicago, and people who invested in this commercial real estate and took out loans are finding out now that this was not a great investment. So delinquencies rising is not going to be great for the banks. It's going to put a lot of pressure on them. And if we continue to see delinquency rates go up, it could result in some bank failures. Now, I just put out a video pretty recently on my channel about how to prepare for a bank failure or how to prepare for a banking collapse with delinquencies rising, with the banks having hundreds of billions of dollars worth of unrealized losses. You need to prepare, right? You need to be prepared for this outcome. If you keep all your money in the bank and then your bank fails, well, it's not going to be great. It's not going to be something you want to deal with. So I think that a great way to defend against something like a banking collapse is to hold Bitcoin in cold storage. And this is something that I talk about in my recent video. I go over some of these vulnerabilities we're seeing in the banking system and also some solutions for protecting your money. By holding Bitcoin in cold storage on a little cold storage device, you can be your own bank. So I think that if you are holding Bitcoin, maybe on an exchange or somewhere like that, it may be time for you to think about cutting out counterparty risk and being your own bank, holding the money, the Bitcoin yourself in a safe place on a safe cold storage device. So I'm putting a link to Trezor's cold storage devices down below, as well as CoinKite's. I really love Trezor. Trezor's cold wallets are very beginner friendly, right? They're very user friendly and easy to use. So if you are someone that's new to Bitcoin and looking to protect your Bitcoin, check out Trezor. If you're someone that's a little bit more tech savvy and looking for one of the most high security cold wallets out there, check out CoinKite's cold wallets. I'll put that description or I'll put that, sorry, excuse me, I'll put that link down below in the description as well. But I really recommend to anyone who is getting into Bitcoin, look into cold storage. It's also a cool concept. You can be in full control of your money, right? With all other money, you kind of have to trust a financial institution unless you want to stick a bunch of cash under your bed. So definitely check out those cold storage devices. And let's see what else we got going on here. So yeah, banking system not looking so great. Delinquencies rising, macro environment not looking too hot, liquidity somewhat tight. So I think there's a lot of risks in the banking system, and I kind of think we're going to see some sort of banking crisis this year or next year, especially if we don't see liquidity increase. So, something to keep your eye on. Now, let's move on to the last item on our agenda here and move towards the housing market. We have been seeing a lot of things about the housing market that are not great. We've seen that home sellers are outnumbering home buyers by the largest gap ever, according to Redfin, where we're currently seeing over 600,000 more home sellers than home buyers, and that's the largest gap ever recorded by them. Another thing we're seeing is that the Google searches for can't sell home and help with mortgage are at all-time highs, above their 2008 levels when we saw the global financial crisis. So that is not a great sign, right? When you're seeing, we're seeing the signs out there. We're seeing delinquencies up. We're seeing that people can't sell their homes. We're seeing a lot of similarities to 2008. Now, maybe these Google searches have to do with the fact that more people are on the internet now. Maybe that has something to, maybe that's impacting why they're higher than 2008, but not a great sign when you see Google searches for can't sell a home spike up. If I was a homeowner, I'd be a little bit worried, right? Maybe this could lead to a housing crash. It's supply and demand. If there isn't enough demand at the current market price, then home prices need to fall. And I really feel like there is this disconnect when we look at the housing market. A lot of people my age, young people, seriously can't afford homes. So these wealthier, older people who maybe have multiple homes, if a lot of them are looking to sell those homes, maybe they want to move into a different asset like Bitcoin or gold, which is ripping. Well, if too many of them look to sell at the same time, it could ignite some sort of real estate crash. Now, one thing we also saw is that mortgage rates came down below 6% for a 30-year mortgage, and this may increase home buyer demand. People may be seeing mortgage rates coming down below 6% and thinking, hey, now's my opportunity to buy a home. So we'll see if this increases home buyer demand. It might. Another major reason why these mortgage rates may have come down is because Trump directed Fannie Mae and Freddie Mac to buy up around $200 billion worth of mortgage-backed securities. I'm not sure if they've done that already, but if they have started buying up those mortgage-backed securities, that could be contributing to these mortgage rates coming down. But it really, another major reason why mortgage rates are coming down is that prices are just coming down. And we've seen this with our Trueflation indicator on X, one of my favorite indicators for measuring prices. We've seen that demand and prices have been coming down for months. You've seen this at the gas pump until today, that gas prices have been coming down. That probably has something to do with a lack of demand, with less production, right? That's a sign that we could be moving towards something like a recession. So with prices coming down, with markets not performing too well, maybe these mortgage lenders are willing to accept a lower mortgage rate. And maybe with less home buyer demand, they're realizing that, hey, we got to lower our mortgage rates so that we can increase demand for this market. So we will see what happens with the housing market. I do think that housing prices are going to need to come down in real terms. And when I say real terms, I mean compared to everything else. Younger people just can't afford houses. And at some point, older people and wealthier people with multiple houses are going to want to get rid of these houses. So I do think that the prices do need to come down. Now, we will see what happens with the economy this year and next year. We are likely to get more money printing, more stimulus, and with the money supply going up, that could lead to housing prices continuing to go up, but maybe they just don't go up as much as some other assets. And maybe we see prices rising faster in other areas. So I definitely think there needs to be some sort of housing correction at some point, and maybe it could be soon. We're definitely seeing the signs out there that the housing market is not looking so great. That is all we got on the docket today. So unless anybody has any sort of topic that they want to cover or thoughts on the conflict between the United States and Iran and what's going to happen there, I'm very interested to see what happens with gold and the safe haven trade. I'm really interested to see uh, kind of that coinciding with some of these economic weakening signs we're seeing in our economy, right? If we could see risk assets take a big dip lower. Awesome to see Bitcoin going up today. But yeah, that's going to wrap it up for this one. If you didn't like the live stream and subscribe and share it, what are you doing? Make sure to help me out and do that. And then also check out some of my recent videos. I just put out a video comparing the gold standard to the Bitcoin standard and talking about what the future of money looks like, if we're more likely to go towards a gold standard or a Bitcoin standard. And then, as I previously mentioned, I put one out about how to protect your money during a banking collapse. So I think that's going to be a very important video to check out, especially with how the banks are looking. Go ahead and give that a look, give that a like, give me a subscribe, and come back next Monday for Monday Live Lab. I think I'm going to start doing these in the morning. I was doing them at 5 p.m., but I'm honestly just too cooked at the end of the day. So maybe 9:30 next Monday, but I will let you know on my social media on YouTube when the live stream is going to take place. Thanks for tuning in if you stop by, and I will see you next Monday. And how do we end the stream here? What's going on? There we go.